What's good, y'all? It's your boy Sham, also known as the BJJ Lender. Sitting across from me is my boy Rocha, also known as NASA, the CEO and founder of SmartVest Capital. If you don't remember him, he was here last month, and we went over a couple of, free game on becoming a real estate investor or a real estate buyer and a homeowner. So this week's podcast is going to be more of the same. We're going to be discussing the state of the market, and I'll be going over the interest rates in brief before we talk about the latest Donald Trump Liberation Day policies regarding tariffs and a couple other topics that we have in store for you. With that being said, welcome to the podcast, NASA. For those who weren't here last time, just introduce yourself real quick. Where can we find you? What do you do? And you know the drill, bro.
What's going on, guys? NASA Rocha, CEO, co-managing partner of SmartVest Capital. We're an investment firm here in the greater Texas area, and we specialize in single-family investments and anything as far as like land acquisition and multifamily. So everything that blankets real estate investment, we're in it.
Yeah, so with that being said, you already know what's the deal. So just like last month, pretty much the market is still in the same situation, especially right. At least in the Texas market. What do you think? The markets are hot right now? Is it a buyer's market, seller's market?
So I think it's probably, for the last couple of months, it's been right in the middle about that 50-50 buyer, seller's market. Like, you're right in the middle, but I think it's more buyer heavy. And when I say buyer heavy, when I say heavy, it's probably like 2% more on the buyer side, more than anything. So
yeah, it's like 51-49, if anything.
Yeah, exactly. So from our last conversation, one thing I had noticed is rates did drop freaking 0.2 points. Yep. I think they were like at 6.9.
Yeah, 6 and 5/8. So I looked at before we were even driving here this morning. It was 6 and 5/8 or 6.63.
Yeah, I think it's like 6.63 is what it was. So it dropped freaking about 0.2 points on that end. And I mean, you would think, oh, cool, like, people are getting all hot and bothered to go and buy more properties, but it's one of those weird months where the moment rates went down a little bit, the tariff situation started going on. So It's like you have a lot of people that are just based, and this is investor and just regular traditional buyers, consumers. Everybody kind of sidelined for a couple of weeks, just like, oh, what's gonna happen? But I see it freaking snapping back and getting back to normal right now. It was just one of those brief scares. Another thing too that I noticed, insurance rates across the board, nationwide, are up, and that's what's scaring a lot of homeowners and investors, and also sidelining them opposed from the tariffs and all the other things that are going on.
Right, like it was like at the time of this recording, the tariffs were reported yesterday, April 2nd. Today is April 3rd. You guys will probably be getting this podcast next week on April 8th, but you guys already know the deal. So when we watch this, I watched them announce it, 10% baseline. It's not only going to affect investors, it's also going to affect consumers.
Right.
How is it going to affect the, spending habits of real estate investors this day? How is it going to bite into their bottom line and their profits?
So the way it's going to bite into their bottom line and profits is the fact of imported material. Mm-hmm. So imported material, you talk about that 10% baseline. I mean, yeah, it's 10% on top of that. So now you got to freaking change the whole margin to be 10% less on your entire underwriting, the whole deal, whatever. Let's say it's not even just a deal. Let's say it's a consumer purchasing a home. I mean, most homes that are already built, they don't have those tariffs fixed into that because they're already pre-built. But going forward, what's going to change is just the underwriting of deals. I mean, we just got to pivot to the left, we got a raise on tariffs. So I was like, all right, cool. Now he's going to buy it cheaper. And that's what that means as far as like the builders and investors, that you're buying it 10% cheaper, or you're offsetting those tariffs that are having on the material,
Facts. And in addition to that, the cost of labor is going to go up because of the fact you can't have, undocumented workers now, and Americans want more money. And, they're not going to be asking to, work for pennies on the dollar like, like minorities and immigrant people. So that is going to take a big hit. But how are you going to go back to the drawing board and just do the math? Are you going to switch the formulas up, or is it still going to be the same?
I mean, you're not really going to switch the formulas up. You're going to keep the same formula, but you're just going to adjust and pivot to whatever the cost of labor is. I mean, that's why you should have a good rapport with your subcontractors, your general contractors. That way you can make that phone call. It's like, hey man, where are we at with like price per square foot, price per square, whatever you're looking as far as like roof or general construction inside the home. So I mean, that's just open-ended conversations you have with your subs and GCs.
Right.
But, I mean, do I think it's going to change drastically? Probably not. Will it go up a little bit? Probably so. But the same with the tariffs, freaking are putting that markup on the material. I mean, labor's going up a little bit too. But as investors, builders, developers, what we do is we just underwrite it a little bit cheaper to offset that.
And on the wealth management, asset management side, on the trading side for traders, you know, for informational purposes and entertainment purposes only, of course. If you want financial advice, speak to a financial advisor and a financial professional. I'm just throwing this out there. But a lot of the stuff happening in the market right now, in the stock market, is the same as the real estate market. Right. It's a lot of emotion and sentimental stuff going on. It's like, look, it's going to bounce back tomorrow. Right now, it's people just freaking out. The average consumer, average trader who does not do their research, and these like companies like Nvidia, Tesla, panic selling. They just want to take profits and leave. But you know, the investors like myself, like you, long-term stockholders and stuff like that, we're just looking at this as a buying opportunity. And if we have the cash, why don't we just jump right in and buy a little more property or buy more stock?
And right now, as investors, like you said, it's a time to like be cash heavy. That way, like, you want to be as liquid as possible. That way, when these opportunities come in front of you, you can execute and do what you got to do. But I mean, at the same time, I mean, across the board, like whether you're in whatever like the investment roles, like the stock market, you want to analyze, you want to see what's going on the playing field. That way, you're not caught up in the crossfire. You want to be able to freaking check it out from an overhead view to see what's going on. That way you can pivot with what's going on in this economy. You know, we were just talking about this before we hopped on the podcast. We're about right now, like a recession is being triggered, and you have to be aware of that. It's not one of those things like, oh, honey, we gotta freaking be conservative. We gotta sell. Like, no, you want to freaking do what you got to do. Keep moving forward. If you're in sales or any type of like real estate or you're just an investor as a whole, like you pivot, you freaking buy cheaper. That way, once all of this stuff is done going on, then you go back to normal. You know, it's one of those things where it's not the first time this ever happened either. I mean, this kind of reminds me of like 2022, whenever the rates went up as far as like the mortgage rates, and everybody freaking freaked out, got scared. Everybody went to the sidelines just to wait to see what happened. I mean, this is honestly opposite. Rates went down, but insurance rates are high, and then the tariff costs are on the material. So again, people are freaking out. It's one of those panic freaking time periods, but it's like at the same time, you just got to freaking weather the storm, keep moving forward, adjust your costs, adjust your underwriting, and do what you got to do.
And cliff note, y'all. NASA, this real estate bubble being about to pop, we've been hearing about this for hundreds of years. When did it pop? Never. Yeah, it never popped. Yeah. Everybody talks about, oh, I understand like freaking micro markets popping. That happens pretty often. But as far as a whole, I mean, that never happened before. Yeah. Real estate prices are going to appreciate no matter what. Even if we're in a recession, people are going to pivot. Like you said, they'll figure it out. And smart investors are actually going to come right in right now and put more stock into it so that, you know, when it appreciates, they'll take the equity, they'll sell the property, they'll take equity, they'll take profits, and, you know, reinvest it. Yeah, it's buying at its bottom value. Right. That's the whole thing about being an investor. You don't ever freaking overpay. I mean, you might pay premiums in certain instances for short-term freaking gains or short-term goals, but at the same time, you always want to buy it at its bottom value. It's the same thing for us. Like, whenever we're trying to buy that deal, 60, 70 cents on the dollar, it's like you want to buy it at its bottom value. We're not purchasing retail. You know, we're not in that game. It's not the name of the game, you know. Buy low, sell high. It never changed. That's what we learned in school. One of the few good things we learned in school, actually. Buy low, sell high. I think we learned that in economics and accounting class, for if all that matters. And, you know, I took a, simulated business class in high school too, which where we met once a day for like 2 periods or some shit, like an hour and a half business simulation class, where we operated a business, learned the different departments, blah, blah,
Was
blah.
that in high school? You did that in high school?
It's called virtual enterprise.
Okay.
So I remember a little about it. I do remember, whatchamacallit, we operated a bicycle company. We sold bikes. Yeah. Like the product we sold and the services we offered were for bikes. And I'm not talking motorcycles. Remember, we're teenagers, so we're selling regular bikes.
Right.
You know, mountain bikes, BMX. I don't know. I don't remember it. It was like 20 years ago, but whatever. But the fact of the matter is, you buy low, you sell high, and just pivot real quick, since we're on this topic. While I was on my way here, I did a quick Google search. Even though as a financial professional, I know this, it's in the back of my head. I just want to refresh my memory. It's like recessions. The average length of recessions is like 15 to 18 months, so it's not even that long. So get in right now while it's hot, while the market is at its worst, because guess what? Millionaires are made in the recession.
Yep.
And I
heard that like when I first got into real estate. That's one of the first things I heard. Millionaires are made in recessions, and at the time I didn't know what that meant. But at this current time period, like, oh, I get it. I know exactly what they're talking about.
Yeah, and this is our time, bro.
Right.
This is our time. Like in COVID time, I didn't have the opportunity to get. I wasn't blessed and grateful to be in this kind of position.
Right.
This is when I'm gonna put my money into the market and watch it multiply, by the grace of God, of course. But like during the pandemic, I just started Fortitude up. I just started up Fortitude. I left the fucking bank. I said, fuck you. I'm tired of, y'all know my story if you've been coming here enough. Like, I said, fuck you to my manager. I said, fuck you to the bank.
Yep.
I want to work remotely. I see all my friends and family members working remotely, making bread. Meanwhile, I'm stuck at a $20, $25 per hour freaking desk job, glorified sales rep being called a banker when I'm making millions and millions of dollars for the bank. Instead, what I did was I put in my notice, I dipped, brought my clients with me for those, 10 plus years I serviced these clients. And it's not about the bank. They don't trust the bank.
It's about the relationship.
It's the relationship. Yep. And when I become a broker, guess what? I'm showing you the whole menu. I'm not just showing you one piece. I'm not showing you Chase Bank. I'm showing you, Fidelity. I'm showing you SmartVest Capital. Yep. I'm showing you, jewelry. Yep. I'm showing you everything. Alternative investments, real estate, gold, commodities, diamonds. I'm showing you stock.
Give them options.
Even options. Like, I give them options. I'm serving everything to them at a silver platter. And I'm like, look, I have the fiduciary responsibility now. And I give you the option to eat at whichever restaurant you want. Exactly. You don't have to specifically come to Chase Bank and order Chase now. Like, I give you the whole menu right then and there.
Right.
So it's just our time.
It's our golden era right now.
Yeah.
We got to take full season advantage of that.
Like, you started SmartVest during the pandemic as well, right?
No, so it was a little bit post-pandemic. So we started SmartVest in 2023.
Exactly.
But I was in investment real estate already right during that COVID time frame. That's when I got my feet wet. So I jumped in the game late 2019, right when COVID was going on. And I'd probably say more on the early 2020 side. But right when that stuff was going on is when I hopped in the game. And I didn't know what was going on. Everybody was kind of freaking out. I'm like, oh, damn, I just got my real estate license. Was I not supposed to do that? But ended up working out. You talk about the panic. Everybody had that brief moment of panicking, which is like probably for a whole quarter, everybody was just freaking the fuck out.
That shit bounced back in less than 6 months.
Yeah, no, that's what I'm saying. It was a quarter is what it took. And it bounced back immediately, and that's when it became one of the hottest markets we've ever seen today.
Yeah, from mid-2020 till
mid-2022, so about 2 years.
Yep. Killed it. I think the market went up like 60% in those 2
years.
It
did. I mean, shit, the people that bought their homes in 2019, it basically flipped them when they sold them before
a miracle, bro.
Summer 2022. It's crazy. The capital gains on just homes that were purchased at retail, not even investment prices, bro, they made money. They made a lot of money on that.
Yeah,
and those people, they did the right thing. They seized the moment and freaking made money.
Yeah, and it's our time now. Like, we're going to go back to that part. It's our time. We came in during the pandemic. We're just, startup entrepreneurs.
Yep.
We had a little bit in our pocket, but for those that have some bread in their pocket right now, take that leap. Word of advice, just jump.
Don't look back.
Yeah, jump into the waters, man. This is the time. The market.
If you're 60 years old, you probably shouldn't be making freaking volatile investments. You should probably be doing very safe stuff. But if you're under 60, bro,
20s, 30s, 40s, this is our time. If you got some money in your pocket to spare, this is the right time to go in. Even if it's just an S&P 500 index fund, I'm talking Vanguard, VOO, or SPY, SPY, whatever. Just invest in one of those two and watch it run up. Like, I only had a little bit of money back in like the pandemic, so I put in a couple thousand in VOO, and guess what? Now it's like 10x. And that's not a lot of money for me. It's like, 15, 20 grand in the market.
Right.
But I put in like 1,500, 2,000 that I had when I, put in my thingy, what do you call it again? Resignation notice at the bank. And I started collecting unemployment while I was running my business. It's legal to do that, okay? So whatever, I reinvested my unemployment into, Robinhood, into VOO. And VOO at that time was like 250. Now it's like 550. So, I essentially made back my money and doubled it. And
your money's doing no good just sitting in the bank.
Yeah,
it's
for
doing
real.
no good. You're not helping yourself. You're not gaining any type of significant interest. You want to invest it, whether it's in real estate, whether it's in stocks, whether it's in gold. Invest your money as a whole, man. Like, it's just doing yourself no good. You can't just play safe your whole life. You play safe your whole life, you're never gonna amount to anything. You're never gonna do anything. That's just what it is.
Right. C's get degrees, y'all. You're gonna end up working for us at the end of the day.
Yeah, no worries.
Sorry. But
put in an application. Let me know.
Yeah, for real. We're always hiring, man. With that being said, we're talking about tax strategies over here today. Just jumping into today's topics. You mentioned capital gains a little bit, and real, pandemic millionaires, people just jumping into the market, open water. It's open season, just like right now. Let's talk some strategies. Like, before I even delve into, like, talking about depreciation like we planned, how do you benefit from it as a real estate investor with using depreciation as a strategy when, you're buying a property? And getting your taxes done at that time.
So, I mean, we're talking about rentals right now, right?
Yeah.
So we're talking about single-family rentals. Let's just talk long-term.
Right.
So the way depreciation helps out us, the investors, as far as like on the single-family side, well, not even single-family, just investment real estate side, is being able
multifamily too.
Is being able to depreciate your asset within getting your taxes done and all that good stuff. And obviously, you want to have the right accountant, CPA to do all that stuff, but I mean, let's say you're putting any type of work, any type of deferred maintenance into these properties. Right. I mean, that's stuff that's write-offable. You can write that off. You can depreciate it and it basically bring like what you're bringing to the table. I mean, look, guys, we make money here, so we actually got to pay taxes.
Right.
But like you're paying a lot less than to Uncle Sam than what you would normally do just by having these properties you can depreciate off of. If I'm not mistaken, within the first year, what is the amount that you can depreciate off a home?
I'm looking at that right now. I have it in my show notes, actually. You could depreciate over 27 and a half years. Right. I remember that. And you can write off up to $10,000 per year in paper losses. Yep. That's just regular depreciation. We're not even talking about accelerated depreciation.
So that's $10K less out of your pocket, is what he just said.
Yeah. What's up, fam? The BJJ Lender here, also known as Sham. If you're serious about transforming your overall health and wellness, you need to check out Simple Peptides. These peptides are a real game changer for weight loss, muscle recovery, and performance, and so much more. They've helped me push through intense Jiu-Jitsu sessions and recover faster so I can train smarter and longer. Head over to simplepeptides.com and use my affiliate code Shamier. That's SHAMIER at checkout to get 10% off your next order. Don't wait. Upgrade your training and recovery and your lifestyle with Simple Peptides today. Shop now at simplepeptides.com and enter code Shamier at checkout. Train hard, recover smart, and I'll see you on the mats. Okay. So
per home?
Per home, basically. Okay. So accelerated appreciation, you could write up to 100% of your property on that taxable year, if you haven't taken depreciation on that property previously. If you bought that property 5 years ago and you still haven't, taken this hack, man, dude, all this shit is fucking available to you. You just have to get the right fucking accountant or the tax strategist, me, hit me up, just fill out the form and, let's schedule that fucking consultation. It's free, and I'll set that tax plan up for you. If you have the right guy It's not your guy across the street at H&R Block doing your taxes or Liberty Tax. They got a piece of paper from a 4-year school, or they did a 3-month crash course on getting that certification. Did they do additional continuing education? Nah, they didn't. What they learn in school is what they learn in school. You got to go outside on the street. You got to talk with the real estate investors. Right. People that are doing it real time. They know this game. They understand what cost segregation studies are, depreciations, or bonus depreciation, which is a tax hack where you could write up to $100,000. I mean, 100% of your,
And I'll give a perfect example of that. So we just had Hurricane Beryl hit us last summer, and I have a beach house in Galveston. It's probably
must be nice,
probably less than a mile from like the actual like coastal line itself.
Plug, y'all.
But the roof got pretty fucked up. The siding got messed up. My AC unit freaking got damaged. Got leaking on the inside. So I mean, we got all that stuff repaired. So I mean, guess what I'm gonna do whenever it's for my taxes this year? I'm gonna write that shit off. Yeah. Like, keep your receipts, keep your freaking track of all the invoices that you paid, but keep that stuff in track. That's what you should be doing if you don't have a property manager. Keep all that stuff. That way, whenever it's time for tax season, you're able to freaking present it to your accountant, your CPA, get that shit written off, then depreciate it a little bit more. Yeah. So that's what that's very simple. I mean,
and the truth is, sorry to cut your thought, but truth is, insurance companies do not give a fuck about giving you money. No. They want to find every fucking reason to not give you the money, nickel and dime that shit.
Don't get me wrong, I made an insurance claim on that home, but like that came out of pocket. And that's like that's the freaking, what's the word for it? That's the shit they don't tell you about in rentals. I mean, that's the cold hard truth. Like, sometimes you're gonna be out of pocket, guys. It's not gonna be all freaking
loans.
Yeah, I mean, not even just loans, but it's not gonna be just happy selling loans every time. Like, just because you have insurance doesn't mean they're always gonna cover it either. You gotta have enough freaking reserves to be able to cover that. Because guess what? If your house goes to shit, your tenants aren't paying, and they're gonna freaking probably make a lawsuit against you for what they're paying per month if you're not doing your responsibilities as a landlord.
Right, and they could not pay you rent for the next 2-3 years because they could stretch that case out forever.
Yeah.
As a tenant, as a landlord, all that shit.
Have reserves. Have enough reserves to cover your butt, especially if you own a home on the coast like I do.
Nothing comes for free, man. Yeah. Nothing ain't unicorns and rainbows, especially when it comes to like depreciation or just repairs for something like that.
Right.
And pro tip, and I think you'll vouch for this as well. Like I said, insurance claims, insurance companies will find every reason, even during a fucking tornado or a hurricane, to not pay up. Because guess what? They're getting thousands and thousands of claims. You're not the only one that got hit with a tornado or a hurricane. Your neighbors are making the same fucking claims. So each and every year, do yourself a favor. Just, pull out your phone, not this iPad, whatever. Just record all your belongings so that they could see the quality of your property or your belongings, what you have, so that they know, like, this shit went down or this is damaged, and insurance companies can't come at you and say, well, I didn't see a crack in the fucking ceiling. Same thing goes for, landlords. Yep. You keep, you record that shit and just move on with it and tell them, look, I got evidence. It's like
just covering your butt at the end of the day. Yeah. That's just like whether you're just being a landlord, you're keeping that documented for insurance. But at the end of the day, if I were to give anybody a tip, stay away, at least right now, until this somehow becomes governed or even regulated to where it needs to be, stay away from nationwide insurance companies. You want to get a state level insurance company. Yeah. They have a lot less clientele to freaking take care of, but they'll also pay attention more to what is actually going on. There's more of a relationship in there. Don't get me wrong, it's an insurance company at the end of the day, but I've had nothing but bad experiences. A lot of my fellow investors and even people that are just direct consumers have been having a ton of trouble with these nationwide insurance companies. It's just beyond my belief of what's going on. It's disgusting if you ask me.
Facts. I agree with you 100%. With that being said, on that's the beauty of depreciation. Like, take advantage of it.
Yep.
Doesn't matter if it's your primary residence or an investment property. Take advantage of it, because at the end of the day, what that's going to do, it's lower your tax bill, or it could increase your refund. You don't have to be a real estate, this doesn't have to be your full-blown career. Right. This could be a side hustle. You could be a W-2 worker. A lot of my clients that I service are, high income earners, W-2 workers, Yep. They have 2 or 3 rental properties on the side that could replace their W-2 income.
70% of the landlords I know have actual regular 9 to 5.
Right.
They're not full-time investors. That's just what it is. I mean, that's most of the reason why these guys are getting like single-family homes as rental properties for their portfolios. I mean, these guys have a freaking they have a 9 to 5. They don't got time to manage an entire portfolio or manage a big apartment complex or flip homes to freaking keep the cash coming in while they're gaining cash flow with these rentals. So most of these guys are 9 to 5 freaking workers.
Right. Perfect example is this guy. I'm not going to say their name. I'm not going to say this couple's name, but we just finished doing their tax return this year, filing for their taxes. So this guy, his previous accountant, so in his 9 to 5, him and his wife was making about 350, 400 grand. And from their rental properties, they have like 3 rental properties, making another 150, 200 grand. Really nice area, West Coast, so inflated.
Oh, okay.
Like Seattle, Washington, Washington, $4,000 rent, making $50,000 per property rental income, give or take. And these motherfuckers almost have like, almost $500,000, like I said.
Right.
Just gross income with 400 coming, like 350, 400 coming from their 9 to 5. So $500,000, they're almost paying 60% of that money. NASA is going to taxes because they had a stupid ass CPA that didn't know what the fuck they're doing. Right. So tell me how.
Did you say they were in California?
Seattle.
Oh, Seattle. Okay.
Yeah. So I'm not gonna, give their names away, but they were working at Uber. They're one of the husbands working at Uber.
Yeah.
The wife was working at Zillow. Perfect for us.
Nice.
I told her hook us up with the software and free account. You know what I mean? Yeah. So making almost $500,000 a year, paying $300,000 in taxes. Like, what kind of life is that, bro?
I mean, that's
you're making a net 200 grand.
Excuse my language. You're just getting bent over at that point.
Yeah,
that's
facts,
what it
man.
is.
So my partner and I, we took a look at their like 2023 and look at their W-2. I'm like, yo, what were you fucking smoking? Like, does your CPA know what the fuck they're doing?
Right.
It's like, does your CPA know the tax code and the tax laws?
Does your CPA work for the government?
Exactly. Most of these CPAs just got a piece of paper. They're like us. Their parents wanted us to live the American dream. And every episode so far I had a guest on, I say, I'm a first-generation American, and I hold myself proudly on that. Our parents were afraid to freaking even spend $1 on their credit card because they think the IRS is going to come after them.
Right.
And they're just paying their regular bill, just like any other hardworking citizen, right? So when I show this guy the sauce, like, yo, Mr. and Mrs., you guys peep this shit. Like, you guys could deduct almost $250,000 in taxes right here, right now, which is going to clear you for another $250,000. So instead of in your pocket. So what's that? You're getting, instead of paying $300,000 in taxes, you're paying $150,000. We cut your taxes in half. Plus, that's just another $150,000, $200K in your pocket. What you're going to do with that? Reinvest that shit. Go out and buy another.
That money's already gone, so you shouldn't even have a think like, oh, cool. So I'm not going to spend this money on a pretty little car, or I'm going to put this. We're going to do updates to our home. Like, no, that money, like the money that you've already thought is out the door, keep that same mentality and replug it in to whatever type of investments you're doing. But dude, you've already had it in your head that it's not there.
Right.
That's one of those things that you got to really be just thinking about. Like, that's where sometimes like I don't want the money in my bank account. I want to get rid of it as soon as possible. That way, it can be. It could keep on compounding,
And that goes into our next topic, bro. I don't even have to look at my show notes for this shit. Like, I've done so many of these in my career.
Right.
Like, I've done like, I don't know, tens, hundreds of it, 1031 exchanges, man.
Right.
Not me personally, but help clients do it. Like, I want to get into the market soon and get into real estate investment. And as much as a high risk guy I am, it's not one of my things. Like, I don't want to deal with people. Like, at the end of the day, when I clock out, I don't want to deal with another fucking client, let alone I don't want to deal with the fucking tenant. So I invest in REITs. That's me personally. Mortgage companies, real estate companies.
That's for the passive investor. Hey.
Yeah, I'm not going to get the same benefits as an actual physical real estate investor, but I'm still making money. I'm still investing in real estate.
Right. As long as you're investing, you're investing. That's just what it is. Not everybody's a full-time investor. That's just a cold, hard truth.
And, 1031 exchanges, bro. It is a game changer for people that know how to utilize it. So before I even put on my financial advisor hat on, How does 1031s help you as an investor?
So as an investor, I haven't done too many myself, but I've sold quite a bit to people that have used them, and I've also bought properties from people that 1031 the profits that they or the gains they got back from and proceeds they got. So it's like I've seen it on both sides, on the seller and buyer end. But I mean, yeah, you're taking the proceeds you get from one transaction and putting them in another transaction. But if I'm not mistaken, there's a certain time period. Was it a 90-day window? Correct?
180 days.
180 day window.
6 months, yeah.
So you got a 6-month window to deploy that capital. I mean, and then how much are you saving? Because usually most capital gains is about 40%.
Yeah,
with the 1031 exchange, what is that the capital gains on that?
Good question. I didn't even put that in my show notes. But it's way less.
Yeah, I mean, let's just say
instead of paying 15 to 20% in capital gains taxes, you're just rolling the profits over, man. It's just tax-free, bro.
Yeah, so it's tax-free. There you go. Perfect way to put it.
Yeah, good analogy.
So you're not getting whacked for, let's say, they said 20 to 30%. Let's be real, it's around 40%.
Right.
You're not getting whacked for that 40%. You're just plugging it back into another property. But, I mean, first things first, I mean, you're not going to talk to a real estate agent about that. You need to talk to a 1031 exchange specialist about that. Get in touch with them first. Then get in touch with whoever your advisor is or real estate agent. Maybe somebody at SmartVest Capital. That way we can plug you into a property where you can obviously we're going to make sure the timelines freaking align with your 1031 timeline. That way when that transaction closes, you can immediately put that proceeds back into the next property. You're just rolling it over is what it is.
And the beauty of it is, like I mentioned, it's tax-free because you're going from one property to another. You're not seeing the profit of it, but you're just, leveling up without paying up.
Right.
It's just like,
you're keeping the ball rolling. That's all it is. You're keeping the ball rolling, and you're beating Uncle Sam on freaking getting taxed on the capital gains.
So perfect example is you bought a property for $300,000, right? And you put some work in it, let it appreciate a little. Now that property is worth $500,000, right? So you just saw what, 200? You got $200,000 in equity.
So let's say if I bought it for $300,000, I'd probably put $100,000 into it. So I'm all in $400,000. And then I resell for $500,000, so I got $100K in equity. And let's say I sell it, get the $500,000 I want, so that $100K in proceeds. Now instead of freaking getting taxed 40% and walking away with $60,000, I'm using that $400,000 plugged into next property, whether it's one property or two properties that I'm buying simultaneously.
Now let's just say you're going from a 2-bedroom buying a 4-bedroom now.
Or I said I'm going from a single family, I'm buying a quad, duplex or a quad.
Right.
So now I'm plugging that into that property, and then I'm closing within that 180 days, like Shamier said, and getting it done, and I'm beating that.
Exactly, bro. I mean, what's
a true definition called? Tax deferred exchange, correct?
Yeah, tax deferred. And guess what? It's not just real estate, man. It's just
you could do it in other things too, right?
You could do it just
stock market, right?
Yeah, defer till you die, bro. Defer. Like, I'm not giving Uncle Sam my money as long as on paper I have a legitimate reason why I'm deferring this, like deferring my payments. Like I'm not getting, like, even if they audit us, we're good. Right. We're scot free. We're gonna get away scot free. So. Yeah, 1031.
Talk to a specialist. Talk to Shamier.
Yeah.
Don't just go off of what they say on YouTube. And talk to a specialist. I promise you that.
And like I said, it's for entertainment purposes only. I may have my licenses, but I'm just another random guy on YouTube. But thank you, NASA. But yeah, hit me up for a consultation. I'm gonna hook you up with NASA if you're in the Houston, Dallas, Fort Worth area, San Antonio too, because you love San Antonio. Fuck Austin. We don't fuck with Austin over here. Bunch of stuff I don't want to say over here, politicals. But he'll help you find your next home, and just like an accountant, a tax strategist, a CPA, real estate agents are like a dime a dozen. There's thousands of them out there. Not all of them know what the investment game is. Their goal is just to sell you a fucking house. Do they know? Is this real estate agent your friend or working for their pockets?
In the Houston and surrounding area, there's about 40,000 people that but they hold a real estate license. Of the 40,000, probably around 2,000 to 3,000 are actively really doing the work, really getting the deals and really closing. Mm-hmm. So I mean, let's just go off of freaking random numbers. I'm not even. These aren't true calculations.
Right.
I mean, I've always heard this saying: 1% of the people do 99% of the work.
Right.
I mean, that goes into the real estate game as far as a consumer base, investment base, anything. there's always that 1% actually getting deals closed.
Like, and that 1% actually understands the investment game. Like, they're not wearing the seller's hat, they're wearing the investor hat, and they're gonna be like, yo, NASA, I know you're an investor. I just got this come across my desk, and I wouldn't have, you know, pitched it and run it by you. Just like a stock.
Yeah, they call you first. You're the number one guy in their book.
He's like, yo, bro, it's a 30% cash on cash return on a average market of like 4%. Fuck yeah, throw me in there. Yep. Fuck you want from me.
Cool, we'll close in 2 weeks. Let's get it.
Cool, let's go. Like, you know, call your guys, call my guys, call the title company. Here's my attorney. Let's just
you talk to any of my team members at SmartVest Capital. They're that 1%. I promise you that.
Yeah, exactly, bro. And it's not even a shameless plug. It's facts. He speaks from experience.
No, that's a fact. Yeah, that's not an opinion. That's a fact.
And same thing for us. Like, my team of, you know, wealth and tax strategists, they're the same shit. Like, you know, they understand the mind process of an investor or a business owner. It doesn't even have to be a real estate investor. Like, how do you play the game for you instead of for the IRS or for, like, you know, the real estate agent? So correct. That's the truth. So today we cover 1031 exchanges at a very high level. Basically, if you want to learn more, you know, hit up SmartVest Capital.
Or hit up the BJJ Lender.
Yep, hit up the BJJ Lender. Go to Fortitude Strategic Solutions. Before we wrap up, you know what I like doing over here, NASA. You already came here once.
Let's go.
I want to plug you in right quick.
Okay.
For those that made it all the way to the end of our show, where can we find you, what you all about, and what you working on right now?
So you can find us on Facebook or Instagram at SmartVest Capital, or go to our website, SmartVest-Texas.com. You can find me on Instagram, NasarioHTX, or you can find Shamier at the BJJ Lender. And if you're looking for anything loan consulting or anything as far as like tax strategies, that's the guy to hit up.
Thank you.
Anything real estate investments, you want to hit up myself or any of my teammates at SmartVest Capital.
And one thing I want to leave y'all with before I go is I have a life update for this guy. I just want to congratulate him. Since our last time, my dude got married. Congrats, bro. Yeah, man.
Put a ring on it.
And one thing I'm going to say is, as entrepreneurs, it's a big milestone. Like,
yes.
Marriage is important. I mean, some people look at marriage as a business contract.
It's the highest level of commitment.
Yep.
That's what it is. I mean, you talk to a lot of people, and people look at marriage like it's some scary thing. Yeah, I mean, I can see how people could see that, but the way I see it is the highest level of commitment. And when going even deeper into that, if you can show as a businessman, as whoever, that you can commit to a marriage, I mean, that shows you your commitment in your business and what you do. How deep are you into it? You know, how much freaking what's the word for it? How much conviction you go into to putting into your business. And that's the way I see it.
And it just provides you with that stability and that structure and routine. Yeah. Like, as a business owner, as an entrepreneur, you do not understand how important it is.
Stay focused.
Just stay focused. Have one person in your life and just focus on whatever the fuck you want to do.
Yeah, keep moving forward.
Like,
I mean, it holds you down. It keeps you freaking
grounded.
It keeps you grounded. Keeps you stable. Keeps
My wife's staring at me across the camera. You can't see her, but she's just smiling and shit. And yeah, she's the boss in the house. I might be the boss in the office and everything, but you know, I come back in with a leash around my neck, and you know, she's the real boss at home, man. That's just how it is, man. I could put my boss hat on right now, but as soon as I go home, she's the boss. Like, I'm the one getting whooped. So congrats on your marriage, bro. It's a journey.
Thank you.
And for those, again, SmartVest Capital, SmartVest-Texas.com.
Yep.
Schedule a meeting with him. Look at, if you're in the Houston, Texas area, Dallas, Fort Worth, San Antonio, if you're looking to invest or even buying your first home, go to him and apply for a mortgage with me. You already know where to find me, at the BJJ Lender, all socials, TikTok, Instagram, and YouTube. And if you want to schedule a meeting with me, FortitudeStrategicSolutions.com. With that being said, it's your boy, Sham, the BJJ Lender, NASA Rocha. We're out.
See you guys.
There we go. How was that? That was
good,
really
man.
good.